Hi, this is Bryce Norr, Senior Editor of Farm Futures Magazine. Welcome to The Buzz for Monday, March 11th, 2013. USDA's big reports are supposed to come at the end of March, but the agency provided plenty of surprises on Friday with its regular monthly estimates. Market analyst Paul Bergner joins me to crunch the numbers. But first, I'd like to unveil an updated version of an old tool to help you assess the outlook, our bull-bear rating. This tool projects the trend for the next 90 days. It looks at fundamentals, technicals, seasonal trends, and money flow from funds, quantifying each to produce a rating from 1, which is bearish, to 5, the most bullish. We'll update it every week or as needed in Farm Futures Daily. USDA's bullish surprise came in corn. The government left its forecast for carryout unchanged despite increased imports and decreased exports due to an unusual increase in feed usage. Normally, USDA waits until quarterly grain stocks data is released to make these feed changes, but it separately increased its forecast of red meat and poultry production by almost 1% from February, forcing its hand sooner. Seasonal trends for July futures into mid-June are also bullish, and speculative hedge funds abandoned their brief flirtation with a bearish bet last week, giving them plenty of buying power. The only neutral reading comes on the price charts, but even these are on the verge of a breakout. As a result, I rate corn a fairly bullish 3.75 on the 5-point scale. A big question mark right now for corn is ethanol. Production is down, but margins surged last week, along with prices. And the market for RINs, the certificate blenders can use if they're unable to meet the renewable fuels standard, exploded to a record high. Paul, what do you think of this RIN market, and is corn ready for a breakout?
Well, I think that RIN market is a bit of a sign that's telling us that there's some concern in that ethanol industry about whether or not they're going to be able to source corn later on into the year. And I think that really is creating some issues out there. We're starting to hear some discussion about maybe moving some wheat into some of those ethanol plants and seeing how that works into the blend of feedstocks and increased in use of sorghum as well. So we've got some stuff there that tells us that we're a little tight for corn coming on into the summer. The price, I think, is likely to have an opportunity for a breakout. I think the one question that's sitting there is what's going to happen with that planting intentions report towards the end of the month, and that would be the one concern that I do have there. But I think corn is poised to make a run, and especially if we see these feed use numbers continue to be strong and move forward that way. So that's what I'm seeing in the corn market today.
Soybeans had a hot hand headed into the report, but the USDA gave the bulls a cold shower by making no changes to its forecast of 2012 crop carryout, despite strong exports in crush to date. The agency said demand would cool in the second half of the marketing year thanks to a huge crop in South America, but it's still unclear whether that's more hope than reality. Shipments out of Brazil remain slowed by logistical snafus, though weather appears to be becoming less of an issue. Our bull-bear reading for soybeans is a neutral 3 for the next 90 days. Funds are in the middle of their buying range, and charts are also neutral for the time being. Seasonal trends are more bullish, but that big crop in South America is a bearish fundamental factor for the market. Paul, is there anything that can shake the bean market one way or another headed into spring?
Well, I think that the key still in that bean market is for the spring is going to be whether or not we get a consistent supply coming out of Brazil. There's still some discussion of dock worker strikes down there. So I think that logistics piece is still out there, and I think it's something we're still challenged with on that side. We're going to get tight on supplies, and the question is, have we moved so much into that export market that we really don't have anything to ship somewhere later on into the spring or into the summer, and that could definitely play a role on the old crop numbers and could potentially impact some new crop numbers down the road. So right now I think it's likely to stay fairly steady. We're at $15 and it may stay there for a while, but down the road I could see some some chances to move that up.
The bull-bear reading for wheat was also a neutral 3, but that seemed almost overly optimistic. USDA raised its forecast for old crop carryout by 25 million bushels due to slow exports, and more bearish revisions could be forthcoming if sales don't improve during the final quarter of the marketing year. Weather was also a bearish factor for new crop, with recent moisture improving crop ratings for hard red winter wheat. Still, my pricing model holds out hopes for higher prices despite seasonal trends that are following a very bearish trajectory and price charts caught in a downtrend as well. Funds continue to hold a big bearish bet in Chicago, which could add short covering strength to rallies if they can get started. Paul, how much time does the wheat market have before it finally makes up its mind on a direction into harvest?
Well, I think the key to that one is going to be what this crop looks like when it breaks dormancy in the plains, and we've seen some improvement in those crop conditions, and we're continuing to see improvement in the crop conditions. The storms have come through; they've left some moisture in some places. Some places have remained very dry. So it'll be interesting to see how that breaks. To me, it looks like the wheat market through the early part of the spring anyway is going to be a weather market. Right now, the funds are counting on better weather, so we'll see where that goes. But there is an opportunity, I think, for stronger wheat prices if it remains dry in the plains and those crops don't improve at the level that the trade thinks they might.
Well, thanks, Paul. We're halfway through our latest Farm Futures Planting Intentions survey, which is generating another strong response from producers. We'll be back with results next week on The Buzz to help you get ready for those big end of March reports.